Hi everybody, welcome to another update on the stock screener. I am doing this video on Sigma Lithium because Houston, we have a problem. We are down another 15% and nobody knows why. So I did already create a video a week ago saying that the valuation was lower, but I have looked at the financials now. And there's something that strikes me. I'm not sure yet because those are Q3 numbers and they were not fully ramped up yet. So we need to wait for Q4 numbers. But we can already start analyzing it. So, okay, assets, liabilities, that's no problem. Don't look at that. It's a much bigger company than this 200 million. It's already at 2 billion. So what we need to look at is the revenue and the cost. And I did look at it. So in Q3, and if you have some comments on this, let me know because this is important. So in the third quarter, they had a production of 38,000, right? 38,000 in the third quarter. So they did sell, they did ship it out, right? Third shipment in November. So this was not in Q3 yet. Okay. So let's use the 38,000 that they sold for this third quarter. Keep that in mind. So production Q3 is 38,000, right? Now what is the cost in Q3? 46 million cost of goods sold. So cost is 46 million. Then we have this thing here. SGML 16 million, 16.5 million. Okay. And then we have another big item, interest payments, 10 million, 10.6 million. 10.6 million. So that's the total cost in Q3. Cost Q3. So what's the cost per ton? So I will call it total cost per ton is cost divided by tons. $1,900 per ton. That's a lot higher than the 500 AISC that I have here, that they tell me. 2,000 cost per ton. Now, granted, production is only 38,000, so 38,000 times 4 is per year is 150,000, okay? That's about half of the full capacity, so maybe if next quarter this is going to double times 2, then the cost is 960. It's still higher than my 540, right? I could delete the interest payments because that's typically not in the all-in sustaining cost. Then still we have 822 all-in sustaining costs. That's still higher than the 540 that I use. So maybe my numbers are wrong, which I got from their presentation, AISC. Or they didn't include the SGML, right? Maybe they didn't include the SGML. I don't know yet. In Q4, I will know more about these numbers. Let's say we delete the SGML. Then, okay, then we are at 600, which is almost the all-in sustaining cost that I have, taking into account that they produce at full capacity. So I think I had to update my chart here. So I will keep the 540, but I will add the interest payments and the SG&A. So I added two columns, two rows here. Interest payments, because these things are going to be important now because of the lithium price that went down. And I have added the SG&A here. And what do I get? So now, and I also did production tons 135,000 because they only started in the second half of this year. And then we go to 270,000. Here I deleted this in half because of delays. I think they will delay construction because the lithium price is so low. This is a lithium price at 900 going to 1,000. And I did add the SG&A and interest payments to this. And you can see that here. I deducted the interest and the SG&A. And revenue is still using these numbers, production and spodumene price. Cost is using AISC. So what do I get? I get this chart. And these are the latest numbers and the latest share price right now, today. And you can see that my valuation has dropped again. And I see a downside of 40% now because I added this line and this line. So this was the important update. It is important to watch the balance sheet. Look at it, because the numbers are not always what they say. Now, what concerns me even more is that they have net losses here. Net losses for 2023. Why? Because of these interest payments and all of that. And taking into account capex. So what was the income? Here it was 56 million, but look at this. This is Q3 with a spodumene price of 3,000. Okay, the spodumene price was 3,000 at this stage. Now it's 900. So this thing here has dropped more than 50%. So I think they are having net losses now because the spodumene price has dropped to 900. So they don't earn any money. Without money, they can't finance the growth capex of 200 million for the expansion of to 766,000 tons. So that's a problem. They need to do financing, debt financing or equity financing. That's a risk. If they want to keep this production going, then they need to grow it. Let's say they don't get financing. That's the next risk. Then we don't need the capex, of course, but we will also not get the production increase here like this. And we get our next chart, which is abominable. If lithium stays at 900, even at 1,000, and they produce at 270,000 with this SG&A, with these costs, then they can't make any money. The value of this company will then drop more than 90%, 80% from here. It's overvalued, okay? And that's if they can't grow and if the lithium price stays the same at 900, which is a scenario that could happen. But of course, if they can get financed, then the upside, there's also not a lot of upside then. Then we still have a downside of 40%. So this is a real problem. And I think people understand now with this lithium price that there is much more downside to this company than I thought. So $10 maybe if they get financed. If they don't get financed, it could drop even more to $6, right? I wouldn't buy it here. This looks like a falling knife, and I don't expect lithium to do anything fast. It's going to stay at 900, 1,000, and yeah, Sigma Lithium will go nowhere. So that was the important update, and I'll see you next video. Bye.